From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 14th, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Now, over the past several weeks, we have been stuck somewhat in a period of congestion or ranging here down inside the black box, bottom right-hand corner of the chart. We could see the lows down here into the 0.6800 level, congestion in the green and the yellow shaded area, resistance was up here into 69.60, 69.80. But we have seen this before. It's nothing really new. You look back to the bottom of the blue trend line, you can see this area, similar area, where found support, congestion, and resistance. Now, what's interesting about this area back here along the blue trend line is once it broke back above the orange shaded area, it began the new uptrend. Not right away. It obviously found some resistance at the blue zone, but it began the uptrend. We look back where the blue circle is, again, pushing above the orange shaded area. It was down below it into that familiar area, down to the green and the yellow zone, finding resistance at the orange zone, eventually pushing above the orange shaded area, blue circle, and going to the blue zone, and then, of course, breaking above that and continuing to go higher. So what's interesting about both of these blue and black circles back here is when the market was below and then got back above the orange zone, at minimum, it went back to the blue shaded area and then, of course, breaking through there, continued an uptrend. We do see another period where it did something similar, where it broke above the orange zone and went to the blue zone. I'll put another circle right here. Let's make this one a different color so it's different from the other two. Let's just make it this green color. So the green circle shows, again, what the market did was it pushed under the orange shaded area down to the yellow zone, got back above it, and at minimum went to the blue shaded area. It did it again not too far after that, and I could widen this green circle out and show you both times where it got under the orange zone, got back above it, and minimum went to the blue shaded area. Of course, the green circle didn't continue as an uptrend like the blue and the black, but at minimum went to the blue shaded area. So that's kind of what we're looking at today. With the momentum we have created over the past 3 days, we're looking for the carry through. We're looking for the momentum or the sentiment to carry on up, at least to the blue shaded area. 100 period moving average, black trend line sitting up there as a potential target for resistance into the mid to upper 7,000. 7,045.65 is the blue shaded area. So if we can find an opportunity on a dip to the orange zone, like what you see back here, then we could look for a buy above the orange shaded area, just like it did last time, targeting the blue shaded area, again, just like it did over here in the blue and the black circle. Eventually, if it's able to gain some strength and push through the black trend line 100 period moving average and that blue shaded area, we could see the continuation of an uptrend. Of course, we always want to assess our risk in a scenario as well. What's the risk of taking a buy here at the orange shaded area? The risk is that it breaks back under the orange shaded area. So when we're looking for a trade, we always want lower risk and higher potential reward. So if we go down here to the 4-hour time frame and we observe that same orange shaded area, the blue shaded area up there, if we're looking for a long opportunity in the direction of our momentum and a carry through to the blue shaded area as our resistance target, then dips down to the orange shaded area give us better risk versus reward. Our risk, of course, as mentioned, is a stop loss likely underneath the orange zone. That way, if everything we're talking about doesn't happen, if it doesn't stay above the orange shaded area and breaks back underneath it, we minimize the impact to our trading account. So anytime it dips to the orange zone on top of historical resistance, we look for it to find support. We look for that rally back to the blue zone as history has shown us. So dips into support become an opportunity to go long. We're looking at 69.60, 69.80 here at the orange shaded area. You can see that resistance back here. You can see the market tapping into resistance even here on the break of it to go lower. So we're looking right around 69.85, maybe 69.90 if you want to get a little bit more aggressive with the buy or the long opportunity. But I think the lower you can get it, the lower the potential risk or smaller your stop loss has to be. So dipping down towards the orange zone, rallying back to the blue zone is going to be our opportunity today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.